Hello everyone, K Kim here from the Traders Club. Welcome to today's market commentary with K Kim. My name is again K Kim. Today is March 13th, Sunday. It's around 2 o'clock here. Hope you guys are enjoying your weekend and enjoying the rest of the Sunday evening. Hope you guys are relaxing with your friends and family. Let's look at the market. Just kind of give you guys certain sentiment, what we can expect this coming week. We'll look at S&P 500, Dow Jones, NASDAQ, and the Russell today, and I'll go through them pretty quickly here, so bear with me. Looking at the S&P 500, and I've been tweeting about this. I've been writing articles on this, and I've been putting videos together. The very important level on the S&P 500 is this. This is a level right here. This is what we call a pivot level, right? This is at a 2000 level. First of all, that 2000 level is round number, so a lot of times this level will be pretty prominent. Most people will be watching this level. This is a conspicuous level. Obviously, it's because as far as the technical is concerned, this is a level of a pivot. What is pivot? It was acted as a resistance in the past and then became support and became a support here, and then it acted as a resistance for about 3 to 4 days last week. So this was a very important level. Not only that, this is a level that coinciding with what? Recent downtrend resistance level as well. Actually, let's drive from here like that, right? So this is a level coming down like, there you go, and then we have 200 level here, the pivot, right? So we have a downtrend resistance coming in this vicinity. We also had the level, you remember, I wrote an article regarding this talking about the Fibonacci level, right? This is 61.8%. You see this right there? So I just measured this right there and the last level of retracement zone, right? So as far as Fibonacci is concerned, let me just give you quick information on this. Basically, as long as it stays below this level, or if it gets rejected in any of this level, what it's saying is it comes down. When it goes up, if we get rejected in any of these levels, that level is considered, if we get again, the keyword is if you get rejected, it is considered as intermediate to primary term lower high. That's what it means. However, you can see that we were able to thrust above that. Buyers were able to get above that 2000 level on the S&P 500 index, and also was able to get above the downtrend resistance, and that's a level coinciding with the horizontal pivot. And this was a very important level because we have 3 major resistances colliding in this vicinity. Again, downtrend resistance, horizontal pivot, and the 61.8% retracement zone. And Friday, we were able to thrust above that level and close above that level. So question is, where is the market going? I think with the enough momentum, obviously it's gonna have its up and downs in the minor term. I think we will able to get back above a 2080, and some of these levels going to be the next resistance level. Also, not to mention that we do have kind of a more of a wider or more of a longer term resistance coming in. You can see that this has been acting as resistance here quite some time, so that will be another prominent resistance. So I think that the good level that the market is going to retest probably next couple weeks or so is probably somewhere here, about 2100 or 2080 or so. This is a vicinity to watch, and obviously once we get to that level, we can't just say that that's going to be resistance and we're just going to roll over. We have to understand how the market is going to react to that potential resistance. We all know that a lot of times these supposed supports or resistance or pivot level can be, broken. So we can't just assume that it's going to become resistant. Obviously, again, this is how this market operates. You can see that this was important support. And a lot of times when people, they precisely watch this level, like just down to the dot, that's how this market is going to get you. You can see that right there. A lot of people are watching this as support. We got below this 1870 level, so many people thought that this market is going to crash, and this is what we call a bear trap. This market is going to do a lot of that shenanigan, so we have to keep that in mind, that we can't just look at these pivot levels and say that's what's going to, if we get below it, it's going to roll over, or if we're going to get above it, it's going to higher. That's not how this market moves. So a lot of times these pivot levels, this resistance level and support levels are going to, it's more of a like a reference point so we can gauge, right? So right now we have a lot of momentum going on here for the buyers. Next level resistance is going to be about 2080 to 2100. Those are level to watch. Again, once we get to the level, we have to find out how it's going to react to this level, and then we can go from there. So I think that there's a lot of bullish momentum. I think with the recent move, though, with the Friday's move, I think a lot of bears are dumbfounded at this point, and they're starting to get nervous. So I think this is a vicinity where could be some confusion, right? The bears are confused. Is the buyers going to completely reverse this thing and then resume to its primary term uptrend? And I keep hearing that everybody's saying that we're in a bear market. We probably are in a bear market in the in the maybe minor to intermediate term, maybe bearish connotation or sentiment. But if we talk about the primary, we're talking about major primary term, we're not in a bear market. We're actually, if anything, more of a sideways market, but we're still in the vicinity, of a primary term uptrend. Vicinity. We're still in the vicinity of primary term uptrend. What that means is, if this thing continues higher and if it continues higher, it means this level can be categorized as major primary term higher low, which means we're not in a bear market. In the major primary term, we have bearish connotation and sentiment in the intermediate term. There's a lot of fear in the market, but we're not in the bear market in the major primary term is concerned. Why? Because we're still in the vicinity, potential vicinity of primary term higher low, which that has not been confirmed. Hope that makes sense for you guys. Let's go to Dow Jones and see where we're at. First of all, before we go to Dow Jones, I do want to talk about the talk about the oscillators here on the Dow Jones. Looking at the weekly chart, look at the weekly MACD here. We do have pretty interesting pattern happening here. I know it's a little bit more subtle though than 2008, but 2008, this was how the Dow Jones has bottomed since the crash in 2008 and 2009. What happened was we created lower low, and then MACD created what? Higher. That's what we call weekly bullish divergence. When you see weekly divergence confirming, again, signal alone is not enough. You want to see price action confirming. So when we see that weekly bullish divergence, you can see the price action. What we did, we did indeed printed lower low. You can see that. But on MACD, we created high low. So what that means is there are some clandestine buyers. These guys are not so much of a long-term guys, but they can become long-term once we start to see this movement happening. If other supporters coming in and support this movement, and once we saw the supporters coming in and in confirming and then supporting this idea of bullish divergence, then you can see that these guys stay through, and then we saw move like that. We have something similar again. It's more subtle though. It's not so much as a lower, complete lower low on the Dow Jones, but it's just tiny bit lower low there. But we do see slightly higher low happening on MACD. You can say, I can't really say that that's a textbook bullish divergence, but we do have weekly bullish divergence sentiment, hint of bullish divergence. So we have similar sentiment happening, and obviously 2008, 2009, this happened after this kind of crash, but I think so this will be more, that bullish divergence was much more vivid, lucid, and distinctive versus today. We've only came down maybe 10% or so, and so it's just it's not as distinctive, it's not as vivid, but we definitely do have that sentiment happening here with that higher low printed on MACD on the Dow Jones. So there's something to keep that in mind. Let's go back to Dow Jones on the daily chart. On the daily chart, obviously, we still have a resistance coming up here at around, 17,000-ish, 17,003. 100 level or so. We also have the support resistance level coming in here. So it's a quite different story on the Dow Jones compared to S&P 500, because obviously we have this level colliding now. So this is a vicinity, this vicinity right here, 17.3 or 17.2. This is the vicinity where we're going to see some resistance. As far as the moving averages are concerned, we are slightly above 200 SMA, where 10 and 100 has crossed. We're crossing back up here. 20 and 50 also cross. Those are day moving average there. And so we did see a lot of bullish momentum, just like S&P 500. But obviously, we do have a resistance that needs to be conquered coming week. So this is definitely a level to watch here, about 17,229 or so. This is an important level. We're just right at it. If we get above that level, we have the downtrend resistance coming down. And if we start to pull back on the Dow Jones, I think 50 MA is a good level to watch. You can see that. When I say EMA, it means 50-day moving average, but with the exponential moving average and not simple moving average. So, 50-day moving average is starting to rise back up. That means intermediate term momentum is starting to shift. So that's definitely a level to watch there. Let's look at NASDAQ. So NASDAQ is pretty similar. At first, I wanted to look at, again, when we go to weekly here on the NASDAQ and just kind of really zoom out, and we can definitely see that we're still in the vicinity of major primary term uptrend. Again, what I'm saying is we're still in the major primary term uptrend vicinity. What that means is this can potentially be that primary term higher low. Why? Because it has been acted as strong support in the past. So when we see these levels are getting respected like this, is that we're not in a bear market, in a big scheme of things. We are, however, yeah, we have bear sentiment, but we're not in a bear market. We're still in the major primary term. Please understand my terms. Major primary term uptrend vicinity. If we start to continue higher like this, something like that, and then cross this resistance level, we can declare that the uptrend will continue to resume. Major primary term trend. Why? Again, because we're still respecting this level of support there. Let's go back to daily chart. Daily chart sentiment is pretty similar to S&P 500 here, but actually NASDAQ's been lagging a little bit as far as the moving averages are concerned compared to Dow Jones and S&P 500, because Dow Jones and S&P 500 actually staying above 200 SMA, but we're still below 200 SMA there, 200-day moving average with a simple moving average and 100 SMA, but yet we're above all these kind of a minor term moving averages, 10 EMA, 50 EMA, 20 EMA there. Also, this was important pivot that, the buyers able to step in. It was all resistance becoming a new, that's a classic technical analysis there, all resistance becoming a new support. And so that's a good sign. In that process, we have created higher lows and higher high. What does that mean? We have cultivation of minor to intermediate term uptrend going on here. So I think that next level of resistance, kind of a strong resistance for NASDAQ, is this level, because again, this is a strong pivot. It's a 4,900, right? 4,900 on the NASDAQ. It was strong resistance in the past. It became a support here and here. And so then that level is definitely a level to watch. And I think that level also potentially coinciding, not really, but that's the level to watch. And once we break above that level, next level resistance will be about 5,000 level, and that's a big round number. So that's probably also another level, and that's also gap fill area. A lot of times when these this is a gap area right here. When these gap gets filled, they can act as resistance. So 5,000 levels, big round number. I think a lot of people are levels. That's probably going to be act as strong resistance, and also again, but I think 4,900 more of an intermediate to minor term resistance level coming up there, about 4,900. That is coinciding with the 200-day moving averages, simple moving averages. So those are the levels to watch coming few weeks. Or lastly, let's look at Russell 2000. Russell 2000 actually has lost a lot of its ground with the strong cultivation from the bears of lower highs and lower lows. That's definitely a huge warning signal. So we now have a cultivation, potentially a major primary term downtrend. Yet, however, though, Russell might be, many people might conceive or might perceive Russell that we have commenced, we have inaugurated a downtrend. And you know what? I think I can kind of agree with you in that, because of lower highs and lower lows. However, when I go back to a monthly chart, we are just holding one final level. So we go to monthly chart here. If I just draw this right there, just last month. This is what we call major primary term uptrend support. We're just barely grasped for an air last month, and we're just trying to survive in this vicinity here. So can we say that this could potentially be major primary term uptrend vicinity? We wouldn't know that. Again, please understand my term. I'm not saying that this is going to become a higher low like it did back in 2000. What I'm saying is we're still in the vicinity of a potential primary term uptrend support. And if I had to guess, if you say, hey Kay, what did you miss? Let's just say the market is going to continue higher. How do you think it's going to play out? Well, we have resistance coming down like this. So what we want to see is you want to see this in getting up here, and then clearing above the resistance and maybe meet with the horizontal resistance. That's what we call equal highs, and then pull back. And then in that vicinity, we create that higher low. If we can see that, then we can see that major term, primary term, higher low, and then intermediate to primary term, higher low, and then creating or getting above this horizontal pivot, equal highs we just talked about. Once we can see this happening here, I think that I could say that this is a major primary term, higher low. However, I can't just presume upon the market that that's what's going to happen. All I'm saying is we are still potentially, because we have seen, first we saw the Dragonfly Doji that has a sentiment of a hammer-like sentiment, which means it's a bullish candle, right? It's a bullish sentiment candle, but the candle is not enough for this thing to completely reverse back up. We need to see some supporters coming in supporting this market. So what we need to see is a much more there. If you really want Russell to like completely roll over, obviously next level support resistance you're gonna watch. Let's actually go to daily chart here, and I end the video with this. So we have resistance coming up here, right? And if we fall over and if we roll over and creates another lower low, I think that would be huge attack or huge damage for the buyers. I think if that happens, then I believe that Russell is indeed major potentially primary term downtrend cultivation, and Russell to be big danger. But I think something that I talked about in a recent article. Not recent article, but I wrote an article a while back called Bulls Won Last Fight In-Depth Technical Analysis. About a month ago, I wrote this article. And because, Russell is in trouble, and Russell has much more signal that there's a lot of bears in the small caps. But because, where the Dow Jones is at, where the NASDAQ is at, and also the spider, I think, because of that, I think, there's a good chance that if other indices start to make its way up, because we're still in a potential level of primary to major primary term uptrend support. Again, potential level of support. I think Russell can potentially play out like it did back in 1994. Again, I'm not sure that's how it's going to play out, but we've seen something happening here. Again, this is an article that I wrote about a month ago. And this was in 1994. I talked about this in my last video, and I end with it. Again, this kind of stuff doesn't happen all the time, but it's potentially, we have very, very similar price action. Do you see that this is 1994? We have a lower highs and lower lows, and that's a huge warning signal. Very, very similar sentiments today. This is today. Again, this was a month ago. And then what happened in 1994 through 1996 is that this was a resistance level. We can really learn from this. Again, that doesn't mean that that's exactly how it's going to play out today. What it means is watch for these patterns. So let's say, because this is like right over here is where today is. Let's say if this thing gets up and then get this into the resistance, and we're probably going to pull back a little bit, and then we start to thrust higher above this resistance and continue to create higher lows and higher highs. This Russell could see a huge bullish move, because a lot of times how this market moves is that this market uses fear, and it heaps upon fear over the whole market, and majority of people are just completely tired out, sickened by Russell 2000. This thing is never going to continue higher. And then when most people are giving up, that's when the market tends to have huge move to the opposite direction. But again, we don't need to presume upon the market that's exactly what's going to happen. What I'm saying is watch this resistance on the Russell 2000 right here, and then see how he deals with it. That's a level that is coinciding with the daily 200-day moving average right there. That's a simple moving average. And see, if we get pulled back a little bit, I mean, I don't know how it's going to play out. We'll deal with it, and I'll give you follow-up on this video on the Russell 2000 on this matter. But let's say if this thing get up and then pull back a little bit, and then we start to do something like this. If we see something like that happening, then we may see something very similar happen like it did back in 1994. However, if this thing gets up and then just rolls over, like, it does something like this, maybe a little head and shoulder pattern, like a left head, left shoulder head and right shoulder, and we just continue lower and make lower low, then that might be the demise of the Russell 2000. Then, maybe even 800 level is possible on the Russell 2000, because we are dealing with very, very significant major topping pattern here. But I think because of the Dow Jones and S&P 500 and where the NASDAQ is, and the New York Stock Exchange is also kind of in the dire situation also. And I think if all the indices, right? I think if Dow Jones and S&P 500 and the NASDAQ, they all having similar experience or similar sentiment, like it has broken below some of these levels, and then we have created major term lower low, then I would have to say that there's a huge warning signal in the market today. However, because as you can see, S&P 500 is actually still holding up. If anything, we're in a sideways movement, right? More of an intermediate term is concerned. We have not broken this major support levels yet. Remember where the Russell 2000 somewhere down here, and that's a concerning signal. S&P 500 is actually up here and holding this vicinity of major pivot level or major support. Also, not to mention, we've been looking at weekly chart major primary term uptrend support vicinity. We looked at weekly chart on the S&P 500, we looked at Dow Jones on the weekly chart, and we looked at NASDAQ Composite, where all the primary term uptrend support is holding so far. We don't know how it's going to play out in the next couple of weeks, but it is holding. We are in the major primary term uptrend support. Let's just recap, and again, I'll end the video with this right here. This is what I'm talking about. We are holding this level. So because of that, there's some discrepancies versus the small caps and the large cap. So we kind of have to see how it plays out there. As far as the Russell is concerned, though, if we actually go to monthly chart, not much the weekly chart, but if we actually go to monthly chart on the Russell 2000, and just do this, we talked about this. We are holding this level as well. This is potentially uptrend support. We are seeing some buyers coming in. This could potentially be a Morningstar reversal because we do have bearish candle on that third month or prior month. And then we got that Dragonfly Doji, which carries that bullish sentiment. And then again, the March is not over, but we are currently seeing that bullish momentum. So let's say if this thing continues higher like this in the March, and then let's say April continues like this, by the end of April, we see these two supporters coming in and support this movement. Then we can first of all, we can say that we have what? Morningstar reversal right on that uptrend support. I'm not saying that that's what's going to happen. I'm saying these are the things you look for. And if these things do occur, then the sentiment will change. And when the sentiment changes, this market can be very, very violent to the upside. So I'm pretty neutral at this point as far as the Russell is concerned. When I look at other indices like Dow Jones and S&P 500 and NASDAQ, I'm kind of getting into the neutral to bullish sentiment, looking at a more of a big picture. But Russell 2000, I would have to say that we're still not in a bear market in a big picture, though there are bearish sentiment, bearish connotation in the intermediate term, and there's a lot of huge warning signal. So I think with the recent move that we saw on S&P 500, last Friday, I think that was a very, very significant move. With this move right here, I think we are getting in, because this was a territory. I think again with the 2000, the round number, I think everybody was watching. I think most people were thinking that we're gonna see another rollover, but I think again this market knows how to fool the majority. And so I think with the last Friday's move, this is where most bears are very dumbfounded at this point. They're kind of in shock, like what the hell just happened here? But they're probably still going to say, well, you know, there's a resistance coming down here. There's 200 SMA. We're still in this vicinity. So I think what the buyers have done is they have gathered so much momentum in the minor term, which can then transition into intermediate term. But I do think that with this momentum that buyers have, I think there's a good chance that we'll get up to 2080 or even 2100 there. But once we get to that level, it will be interesting how it deals with some of the resistance level that coming up in that vicinity. And I'll follow with you guys either this week or next week. Wednesday, I am scheduled for the live midweek update. Right now, I don't have any schedule going on that day, so I am thinking about doing that. And so I'll tweet it out, see if I go live. If I go live, you guys can always come in and ask me questions or something like that. You can always sign up for the live midweek update on my blog, twotradersclub.com. Just go to a free webinar, and we'll go from there. If you like the video, please subscribe. You can follow me on Twitter and StockTwits, 2K Kim. Have a great night.